Hello everyone, a very good morning, good afternoon, and good evening to all of the viewers. This is your host Vaibhav. In today's session of JForex Indicators Explained, I will be taking you through the concept, the uses, the properties of a interesting indicator known as variance. This is a regression indicator which is based on the time series forecast, and this indicator takes into consideration the price action in the given time horizon. Using that, it tries to measure what are the normal expected prices, and if there is any significant deviation from the expected prices, we get these variance output shooting up. So that gives us the idea that whatever is happening is not as per the expectation. There is significant variation creeping in the price action, and this might be the moment to take a closer look on the price action data and see how things are shaping up, whether the variance is presenting a new opportunity which can be exploited, or if it is a significant deviation which might even force us to change our outlook. So in both ways, we can rely on this indicator to help us guide through the market volatility using the normal expected price series and then the variance therein. So let us see how we can utilize this indicator to look for the profitable trading opportunities. You can find this indicator through a quick search, or if you want to know where this indicator is listed, it is included amongst the not momentum, the statistics functions. Here it comes, and it is just below the time series forecast. Time series forecast I explained to you in the last session. Now it's the turn of the variance. Okay, for a quick plotting, you can do a quick search, and here it appears variance. All right. Now coming to its uses. Here, as you can see on this plotting of the indicator along with this charting for the Euro USD with the candle period defined at hourly, you can see for the price action of the Euro USD, the things have gone sideways in last couple of sessions. So as a result of that, there is not much of an deviation being seen in this charting, and similar outlook is also being presented by this indicator. If we look at this plotting of the indicator along with this price action series, you will notice that apart from this instance where there was significant volatility, in most other cases, the volatility has been subdued, and as a result of that, there is not much of an deviation in the variance output also. So this variance output is being calculated using the last five candle period and standard deviation of 1. So both these parameters are telling us that the volatility has been rather subdued, and only this was the instance where there was significant variance compared to the normal time time and price series. And there have been couple of instances where the volatility has increased but not much, and as a result of that, it has remained quite close to the normal line, the zero line. Zero is considered as when there is not much deviation from the expected price. It is almost exactly as per the expected price. That's when the output of the variance is at zero. If there is significant deviation from the expected price series, then we have the variance indicator shooting up. And if the variance indicator is showing up significant inclination, if it is rising rapidly in terms of multiplication of the output value, in that instance we can immediately notice that there is a significant deviation happening from the expected price series, and this might be the instance to pay close attention to the price action. And using that price action data, we can determine what is happening in the market, whether we have the opportunity presenting for us to be exploited, and if we have other indicators or any other measure of the trend, we can use this with the variance indicator. As this indicator is a trend neutral, it is not going to give you the idea of the trend on which direction the deviation is happening. This indicator can't be relied on to tell that. This indicator basically gives you the rate of change, what is the momentum and how much deviation is there compared to the expected price. So that's the data point you can gather from this indicator, and along with that you will need other confirming factors, whether those happen to be simply the price action points, or you can even take moving averages or any indicator of your choice. So you will have to couple those additional points along with the variance, and using all these data points taken together, then you will be in a position to judge for yourself if this is the opportunity you would like to take the risk and get involved in the market, or simply you should sit on the sidelines and wait it out for a better opportunity to present itself. So both these diagnoses can be done using the help of this indicator. So if we go back in time, when the volatility was a lot higher compared to what we are seeing in last couple of days in Euro USD, here there was this instance when after this subdued volatility, the price action picked up, and as a result of that, we are seeing significant jump in the variance value as well. As things normalized, the variance indicator output then again went back to normal. Now this price is the new normal. When the variance again inches back to the zero line, it simply means whatever volatility has now unfolded, whatever volatility is there, is now the norm, and the new time series, new price series is the norm. And even if the price sustains on the new level, you will see the variance indicator output simply getting back to the zero, and it doesn't mean where it is going, where it was at the starting. Okay, this is simply the acceptance of the new normal by the indicator, and it is also a relative output. You have to see how things are shaping up in relative terms. If there is significant jump compared to what it was in prior candle period or a prior couple of candle periods back, you can use that to compare. And if the output is multiplying manifolds in a short span of time, that is also the indication of the increased volatility, increased deviation from the expected price, and using that you can then decide whether to go for the initiation of the new trade or not. So that's the whole purpose of this indicator. Now let's see how we can customize this indicator using the options available to us on the platform. So we have this option of using different applied prices. You can go for different types of applied prices: close price, open price, high price, low price, median price, typical price, weighted close price. So all these options are there for you to choose from. And if you go for different types of applied prices, you will have different types of plotting of the variance. So whatever is your chosen applied price, that is going to cast a significant impact on the kind of output you get for this indicator. So you will have to decide after keen observations what kind of applied price you want to work with, and using that applied price, then you can go for the opportunities in the market. The time period of the calculation, if you want to keep these indicators calculation based on the lower time frame, the limited calculation data points, then you can do that as well. If you increase it, then it will plot this variance compare in comparative terms using a lot more data points. And of course, if in the calculation period the earlier instances of volatility are also included, then using the current volatility and comparing it with the prior volatility, this indicator will give you the idea if there is significant jump in the volatility or not. So if you go for the larger time frame, that will be the impact. And also you have to determine the standard deviation for the calculation purpose, and using that this series will be forecasted. So you have to define how much standard deviation you want. You can keep it 1, you can even increase it, you can decrease it, so that all these options are there. Let's keep it at 1 as it is with the default option. Now I have increased the calculation period, and as a result of that, last 24 hours worth of time series, price series is going to be included in these indicators calculation. And using that, we have then this output value, if the volatility has increased in recent hours or not, is going to be measured by comparing it with what has happened over last 24 hours. So even if there is significant jump, it will always be counted amongst prior volatility, and then the comparative analysis will be done. Now I will revert back to the default of 5. Okay. The output, it can be kept in the same color combination, or if you feel like, you can always change and opt for different color combinations also. So these options are there for you. You can go for different types of styling combination. Width can be increased or decreased. Transparency, if you don't want the plotting of the indicator to look too prominent on the chart, you can do that as well. You can lower the transparency factor. You can then go for the customization. These advanced calculation options are there. If you opt for recalculate on new candle only, then the output is going to remain stable throughout the current candle period. The highlight time period zone makes it easier for you to see what is your calculation horizon. So that is highlighted. Calculate from custom data. The calculation can be customized further. You can use this indicator on almost all of the instruments available on the platform. So you have that liberty to use this indicator in whatever instrument you are working with, as long as it is available on the platform. The candle period can be same from the chart, or if you feel like, you can define it independently as well. So that option is there for you to work with. You can even go for the variance plotting on the 5 minutes, even though the chart's candle period is defined at hourly. You can go for that kind of combination or any other kind of combination with this indicator. So here now the chart candle period has been changed to hourly, but this plotting of the variance is being calculated using 5-minute candle period. Now we have the exact match, 5-minute candle period, and also the variance calculation using 5-minute candle period. All right. Now I am again going to revert back to use from the chart side. You can go for ask or bid. So these two options are there. Okay. So that's all from my side for today's session. If any of you have any query or any idea to share, you can write back to me in the feedback section, and I would be more than happy to take the discussion forward. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too. For trying out this newly released trading platform, the link has been included in the bio. So give it a try and let me know how things work out for you for the platform, as well as the indicator which we saw in this session. So thank you all for joining in. I will be back tomorrow with a new indicator, new uses, new concept, many more new things to talk about. So do come back. See you tomorrow.